Hey traders, welcome to a global macro update. In this video, we're going to be going over different asset classes, looking at the price action, trying to find the correlations, and trying to find the sentiment for global investors, to put it shortly. So like always, we're going to start off with the S&P 500 and then work our way around the equities to get a good understanding of where they've been, what happened, and where they could go from here. So in short, we talk about this very frequently of the market structure shifting to a very bullish one where we see a key resistance back in early June break, and now we see a validation of that previous resistance turn into a new level of support at around 3240 on the S&P or SPX 500. If you are looking at that, depending on if you're looking at the SPY or not. But in short, definitely it looks really bullish. If we're going back all the way to the daily, we see that there is a validation retest. We do see the candle prior was a candle closure, and we see the entire day trading above this key structural area. That's a breakout, and then the current candle, if we are zooming to a smaller time frame, even the 4 hour shows a really valid retest. The 12 hour shows a very valid retest, but overall, in short, it looks really bullish. I think the risk on sentiment will continue to move to the upside. That previous high is going to be a resistance, but if we are zooming back, the next key one that I'm going to be looking at is going to be around right here. Because we see key level of resistance, and then this zone is, yes, key level of resistance, support, resistance. But I definitely think that we're accelerating, and that next big move could kind of take us to 33.30, somewhere around there. Because it does look like we are moving, and we can see the last time when we do get these moves, we go parabolic, and then there's some consolidation, and then a correction inevitably, and then we're seeing kind of a similar thing where we're increasing the speed of the higher highs and higher lows, really showing the bullishness in the risk on assets like the S&P 500. All right, so that's going to be the discussion. Very short because really not a whole lot to talk about. We talk about this every single day, and we're really commentating the risk on situation that we're currently in the environment that we're in. We should be looking for things that are longs in things like equities. I would say crypto, definitely alts compared to BTC. BTC right now is in a very, very tight range, but alts do look like they're setting up for a potential next leg, which is great to see. So we'll talk about that a little bit later in the video. But we're going to continue the equities analysis, quickly looking at the NASDAQ here. This is the future, so this is NQ. We see this previous top, which made a double top with the wick and then the candle closure right there. But we are holding this previous main level of resistance at around 10.7K as a new level of support, kind of making a nice base here. And on a larger time frame, if we zoom out, we do see that we are still holding this large ascending channel formation, although overall it is looking really bullish. We do have some room to go if it does go to the downside, where we have an ascending level of support holding the price, making higher lows. But overall it does look pretty good, and a little bit surprised it's not reacting compared to what the S&P is doing. I thought this would be moving up a little bit more because the S&P is having a pretty good day, but overall, still definitely bullish. Not really a structure that I would be looking to enter or anything on, but the fact that we're now creating this new structure of a previous resistance support is good, but the fact that we have a double top there kind of gives me the indication that we could be range bound, and then what would get me out of that range would obviously be breaking this structural resistance. Trading within this range would give me a possible solution where that would be the next move. But right now we're just going sideways, consolidating in an upward momentum. The VIX yet again is falling back to its lows, which is great to see for risk on trades. Not a whole lot to discuss far from that really. Overall, we're looking for a fade similar to what we see right here. So we're looking for something like this, where it's slowly just going to die down, and we're going to see a reduction in the volatility within the S&P, and that would just further create more validation for us that risk on is the true sentiment of the market right now, which may not make sense for a lot of the fundamentals, but in terms of even the economic data that is coming out, as well as the charts for multiple assets, they are indicating that it is a risk-on environment that we're currently in my point of view. So that's going to be what we're going to be looking for the VIX in the next handful of days here. Quick look at the global markets here. Just some consolidation. UK's FTSE 100 is definitely looking a little bit weaker. Japan has been just consolidating, not doing a whole lot. The German stock market has been relatively stronger than other markets, but is consolidating, has broken a key level of resistance, so that's great to see. And then the Australian stock market is testing its previous high, probably really enjoying the increase in the metals sector, as well as Canada, but we don't have the TSX here. All right, big move from the US dollar currency index yet again. Going to be quick looking at the comments. How's it going, Truck Nubs? Hopefully you're having a good day. Going back to the DXY, which is basically the strength or weakness of the US dollar, and we've been saying how it's definitely weakening as we're getting just a kind of a capitulation from this descending channel formation. This gray zone, if we're going back to the daily chart, was a previous wick low that we saw back in March 9th. And then we got a lot of chop right here where, you know, this is pretty hard to trade if you're a swing trader because you're just getting a lot of back and forth movement. But you can see, if we are going to a larger time frame, a pretty definitive zone we can draw in right there. If we take out that, we see this previous level of resistance turn into support. So we are basically right at a major level here. And from the turn right here, we were definitely expecting a sell-off. It was pretty aggressive, but kind of makes sense that the end is going to be a capitulation to the downside. But in my opinion, we're now right at a pretty major level for the US dollar currency index, and as well as just for the US dollar's strength, right? Because it's really strong of a move to the downside. There has been a lot of printing, but at the end of the day, it is the kind of sentiment of the people. Are they going to be entrusting that the US dollar is going to be strong for many, many years to come? Or has this been a point where they've printed too much money, there could be inflation? And that's where we're going to be looking at the CPI numbers, the consumer price index numbers, to see if we're getting quite a bit of inflation, as well as the inflation numbers that they also provide. So we'll see how it reacts to this zone. I would definitely hold off a little bit. I currently am, to see what it does at this level, because it's a very, very important level around 95. We can see that there's another level at 93, but I really want to see how this is going to react around the 95 level. So if we go into the smaller time frames, we do see still the formation of lower lows, definitely lower highs as well. If you just draw some nice trend lines, you could potentially see a descending triangle formation if this support zone holds, something like that. But we do not want to be assuming too much. The dollar has been weak, no momentum, and the trend is definitely to the downside, so we want to respect that. We don't want to fight the trend, but we do have to understand that there's going to be a lot of demand here, and I think this is the time to wait and see how it's going to react to this zone. Is it going to be really validating it? Is there going to be a lot of demand coming in, swooping up the dips, and being able to support it at that 94.50, 95 area? Or is it going to smash through the zone? We're going to be looking for retest and continuation, and then we're going to be looking for further weakness of the US dollar, Japanese yen, stuff like that. And then we're going to be looking also for strength and risk on assets like the S&P, which will probably mean that Bitcoin has a high probability of actually breaking and expanding its volatility to the upside, which is extremely good for individuals trading in the cryptocurrency space, because that means there's going to be more speculation, especially in the altcoins, and that's going to be where the high risk reward setups are going to be, because when altcoins run, they can run for a very, very long time. And if you have a method, a system that allows you to let those winners run, you could use indicators, you could use market structure, whatever the case may be, those are the situations that are really going to be favorable for your account, in my personal opinion. If you have those small losses, you're able to keep it at like 2% or something. And then if you have a 5, 6, 7 to 1 sometimes, those are some pretty awesome gains, definitely, to compound on. Or to take it out, whatever you're going to do. But that's what we're going to be looking for if this US dollar weakness risk on environment continues. So the S&P does look strong. It's reaching a recent high and is looking like it's definitely breaking resistances, holding supports, momentum to the upside. It's increasing in the speed of the momentum upwards, and the US dollar is increasing the speed downwards. So the overall sentiment globally definitely looks like it is risk on. We can see that not just in the United States, but definitely looking at the global equities as well. So looking pretty favorable, although for Bitcoin, we do not see the expansion and volatility yet. So we're just going to recreate this here. Australian dollar, USD, we're going to put a few currencies in here just so we have a good understanding of risk on, risk off in the FX markets. So then we're going to do CHF USD as well, but they might not all be the correct pairing. Like JPY is always at the end, but then we got a good amount of, we didn't do Canada, but that's okay. So we got, let's do Canada. Let's, I feel bad. I'm from Canada, so it kind of makes sense. There we go. Now everyone's included. So what we can extrapolate from this information here, just by understanding the baskets of currencies that we are adding to our chart here. The first one, the most bullish on our 4-hour chart since July 13th, is the Australian dollar. And we're all comparing it to the United States dollar, right? So what this means is Australian dollar is a risk on currency, which means that the fact that people are putting money in Australian dollar and buying it indicates optimism, hope, bullishness, and overall desire for higher risk, higher reward opportunities, which would mean, for example, going and putting money in Canadian dollar, Australian dollar, New Zealand, GBP even, whereas the Swiss franc is definitely, JPY, the Japanese yen, is definitely a risk-off currency, where if you're looking for safety, if you're worried, anxious about the market's monetary policies in different countries, you would flee to those currencies, and they are not doing as well, right? So that's what this chart indicates, to me at least. Although if you're really looking back, yeah, Australian dollar is taking the lead by far if you're really looking back since the March meltdown there. So anyways, that is in line with the overall structure of what we're trying to understand in the market. So I'll just bring this back to the 6-hour for the DXY, and I'll make that large. All right, so then now we're going to go on to the metals, which have been unbelievable, to say the least. All right, so I'm completely out of silver at this point. In terms of trades, obviously, if I'm holding Boolean, not really going to sell those right now. But in terms of CDF contracts for differences, I am now out of my silver trade, and I'm just looking for continuation patterns to the upside. I don't really see anything right now. This is the 1-hour chart. If we're going all the way back to the weekly, we see that this is a massively bullish candle. Now, yes, we've had times in history where we've continued for, let's see, from September until May, or let's say April of next year. It's 240 days. It's been basically bullish, and we went from $18 to like $49. So these moves can occur, but you know, we just dug out of a huge hole here. If we're going on the monthly chart, where we were down right at the support, and this very bullish candle, which had a huge wick to the downside, indicating strength in that support, we dug out of these lows, and now we broke out of our range. We can see that there is a nice descending zone right there that we can identify as a descending triangle formation, creating a nice base for kind of similar to the gold chart, where the gold chart had a base like this. And now, in my opinion, silver has now broken out of what was the $1,400 zone for gold. So this was the consolidation that gold was in, and we can see, let's just go to the gold chart just so we have a good understanding of what I'm talking about. Let's just get rid of this, this, and this, and then go to the gold chart. So when we go back, also when we're talking about this, we have to understand that silver is going to be a lagger and gold is going to be the front runner mostly. Kind of similar to the crypto markets, Bitcoin is going to give the opportunity for alts to run. Yes, there could be altcoin season before BTC, but usually BTC has to be bullish or has been bullish recently in order for alts to run. If Bitcoin's been really bearish, you're not really going to see alts run at all, or there may be a few outliers, but on average, you're not really going to see alts run when BTC is bearish. But when BTC is bullish or has recently been bullish and is just consolidating, then we see an opportunity where altcoins can run. And this is kind of similar to gold, where we see this consolidation right here, very similar to silver. So that is, we are on the silver chart for, oops, wrong one. We're on this monthly silver chart, so we'll go on the monthly on gold and just zoom out. And then let's get our snip and let's discuss what we can see for these two different metals. So in terms of gold, this was our base right here, and we broke out in late 2019. In my opinion, silver recently broke out of its base. This was our base. You can call it a descending triangle formation, but in terms of structure, I think that we can see a clear support here turn into, if we go back to maybe a 2-month, that's going to be a wick, major rejection right there, and now we've broken above the zone. We can also see that this is the recent high on gold. On silver, it's much, much higher. So silver is going to be way more volatile than gold. But what we can also see is look how far gold is ahead of silver, right? Gold is almost at the high that we saw back in 2011. Silver is not even close. Let's squish the price of silver so we can actually see where the high of silver really is compared to gold. So let's go like this, take another picture, and just understand how much more room silver has. So like we saw here, there are opportunities where there's going to be continuation patterns. To be completely honest, maybe I should have kept more. I thought that we were going to hit this high and especially reject off this high, or at least give me some pullback so I get a continuation pattern. Has not provided it. I'm not going to complain. It's been an awesome run, but in terms of continuation, look at this move, and what we can see is it is increasing in speed. So there was a big run, and then this was a pretty long consolidation. Another run, this was that huge March sell-off. Lot of movement to the downside, but we recovered extremely quickly. And then this last couple weeks has just been unbelievable, or a couple months, I guess, has been unbelievable. I think we're going to see silver, like, look how similar it is, right? This is a triangle right here. This is a triangle right here as well, right? And then we see this nice base forming right here, where we see a series of lower lows holding, and then higher lows, and then a horizontal level of resistance. We see lower lows. We don't really see a wick to the downside. We don't really see lower highs too much, but you can also classify this as just like a horizontal level, a nice ceiling and roof right there. And now we've made a new high. So what we're going to be looking for is continuation patterns to the upside, where we're going to be expecting this to increase in speed like we saw in gold, ideally. Now we could get a pullback like we saw here. We saw hesitation, but the overall bias for silver is going to be very bullish unless something very significant happens that catches us off guard. My view of silver is bullish. So I know that we've climbed a long way from the $15 range, $18 range. Now we're at $23 basically, but in my personal view, we want to be looking for continuation patterns. So now that we understand where we are in the last many years and months, we can now get into kind of the smaller term. So there's our symmetrical triangle that we traded right there. Just been unbelievable move to the upside, and then that was a little bit unexpected in how aggressive it continued to move, because we had this zone, which was pretty significant. Don't know if I pressed that. And then we had this zone that was very significant. And then we had another one that was back here. Let's go to the 6 hour. Oops. Give me one moment. And then we had this zone that was very significant. And it broke all of those zones by far. And now we're kind of in no man's land a little bit. Really, really breaking major significant levels on the chart for sure. Let's just remove all the drawings. And then we see this candle closure right there. And then this wick right there. And this wick right there. So that's a pretty important zone. We don't really see anything behind that. Definitely we see a major zone right there that broke out. So the major level of support that I currently see is $18. Let's say $19 is the main level of support that we currently see. And if we even go to like the 3-month chart, then we'll see this zone a lot more clear right there, right? And then we see wicks to the upside, wicks to the upside, support, support, resistance, resistance. Could be a new level of support, even if we get and move all the way back down, where we come all the way back down. We know that there's going to be a lot of, or there's a high probability there's going to be a lot of demand at the $19-30 zone, and we know that there's a pretty significant level of resistance there, and it's not going to be an absolute straight moon. There's going to be corrections. There's going to be continuation patterns. You can't have the price go from here just to here. It's gonna do some pullbacks. That's how markets operate, right? Like sometimes, yes, you literally have a straight line, like we saw in the BTC capitulation, dropping 50% in a day, but they don't happen too often unless you're trading something that is very illiquid. So on the daily chart, it's pretty hard to say that you're going to long right here at 23. To be completely honest, I don't know if I want to do that. So what I'm really going to be doing is just looking and waiting for something to give me a better opportunity, because right now, yes, we're moving to the upside. You know, we're making higher highs and higher lows. This isn't super great. I don't love that because we are kind of squeezing and forming that second high, kind of like this. But it could melt up, definitely. It could pass this zone, but I'm looking for structures that I have backtested and I know what the outcomes are. And this is not one of those backtested strategies. This is just like an ascending wedge, but it's not very well respected. I'd much rather have a descending wedge, a descending triangle, ascending triangle. Even horizontal channels could be great for opportunities to continue the momentum, and I don't really see any of the structures and the overall trade setups that I personally trade, so I'm gonna have to wait. Stay disciplined, be patient. I had an awesome trade, and the structure was great, and it hit all the check marks, and it performed way better than I thought that it would. So, you know, definitely I do think that there's going to be more opportunities in silver. We're going to be covering it within the Performante Premium section. But right now, there's not a whole lot to talk about other than just admiring this move, basically. We also did talk about the opportunity that this has on a global macro scale. So if we go back to the commodity section within our Discord, just gonna get a little bit of water here. My voice is a little raspy. All right, so this is completely my opinion, but Sin, a great individual within our Discord, was notifying that gold and silver are going strong, might finally sell some. So this is my point of view on it. It depends if you're swing trading or if you're investing, but if you carry actual bullion and you're looking for a metal bull run, that would be extremely significant. If you really believe and understand that the central banks that are currently proliferating currencies around the world will have an impact sooner or later, and there is a cause-effect relationship between money printing, easy money, easy credit and the increase of inflation, well then there's going to be some impact with what we're seeing right now with 0% interest rates for a lot of central banks, which make it extremely easy or basically free to borrow money, or negative interest rates like we see in Japan or like we see in Germany, Switzerland, other countries in Europe, with all this money printing due to stimulus. We're extremely dovish. On some places, it might not seem like it, but in terms of what we're doing, the actions taken, it's extremely dovish, which is it's stimulating the economy, trying to overheat it or heat it back up. And we can see the last time we did this, we do talk about this chart often, but I just talk about if there is going to be a metals bull run, we do see that last time we had the metals bull run was when we had easy credit, cheap money, lots of stimulus after World War II, and this was a boom, late 40s, 50s, 60s. That was a boom in the States, right? There was a lot of things that were emerging, and America was on top. America was very strong, and a part of it was because of this easy credit system, and what that created was higher inflation. By the time it was 70s, late 70s, the CPI numbers were double digits. The interest rates, they had to raise them in order to try to reduce the inflation, make it harder for businesses to get credit or get easy money, which is not great for risk on assets like the Dow Jones Industrial Average, which we can see looking at the historical charts. I'm grabbing it right now. This is inflation adjusted. We can see from around 68 when the inflation really became prevalent, and then the 70s got pretty bad, and then the late 70s became really bad for the inflation. And what happened during this risk-off time? What happened was gold and silver really shot to the moon. This was the late 60s into the 70s, and then late 70s was when it really took off. It went from like $30 to 100 and let's say $18 for silver, just in the late 70s, and then for gold it went from let's say under $400, 280 or something like that, to over $2,000. So we can see that when there's worry of monetary uncertainty, when there is fear that the currency that people are using is not able to hold value, not even for a long time, but even for a month, that is when people look for alternatives. And I really think that blockchain will have a extremely important part in this next shift, because right now we do see that there are more people who are aware of the system of money, basically, where it doesn't really have any intrinsic value. You can't exchange it for something with a central bank. It's just confidence really provided by the people who are using it. That's what really money is. And you can't really do anything with it other than just exchange it for goods and services, and hopefully that other person has just as much confidence as you that he can exchange it for something that is actually valuable to him in his life or her life. So we'll see where it goes. This is more of a kind of global macro perspective because it's very long term, but that is why I'm so bullish on gold and silver, is because I think we're living in a time where it's extremely easy to get credit. There's a lot of cheap money available, a lot of zombie companies that you hear of where they could barely pay off the interest, let alone the principal, and they're still surviving because they can get extremely cheap loans and they can just refinance, and that's an environment where bubbles occur. Or at least inflation occurs, because it's just flooding the market with money, right? So then if there is a massive increase in supply, as well as the value of it makes the demand decrease, there's going to be a huge shift, and that's where you see inflation really take hold of economies and really not make a good situation. So that's a little bit of the global macro side of gold and silver. I'm basically going to be patiently waiting at this point, but yeah, we'll see where it goes from here. I am very happy that there's people who are aware of the things happening. So we can see gold is still moving to the upside here. Holy wow. Got a nice horizontal level. So that was the previous target. We did see this ascending zone. Let's get a rectangle there. Oops. There's the market structure. We see a retest and a move to the upside. And like I said, I would be looking for some structure, a little bit more than what we see right now. So not a whole lot to commentate on in terms of gold and silver for a trade, just because it did run away from how far it was going to go. So we're going to be looking for continuation patterns. But right now, I don't really see anything that I would personally want to enter on. You could be looking for a possible entry at this previous level of resistance, which is already validated once. So if it comes back there, that could be a possibility with a lower high or lower the higher low as the potential level of stop loss. And then if we're going back, $1,900 is a very, very major zone within the chart. So we're going back to the daily chart. We can see candle closures right at that zone. Not perfect, but we see candle closure. And especially this one, we see that candle closure perfectly at that $1,900 zone. It's not going to be perfect, but we do see a range there where there was a lot of sell pressure. So we're nearing that level right now. We can just go like here to here, 1912. So around a $10 range where we know that there is a significant amount of sell pressure within the market or take profits. Definitely people are going to be looking to take profit at that previous high, and that is where we would ideally like to see a nice potential retest or something that's going to be giving us an opportunity to continue our momentum. So if we're looking at the 2-day, what we would be looking for is something like this, if it could be a possibility. So we see a big move to the upside, something like this, and something like that, where we see a break, and then this is the type of potential continuation pattern we'd be looking for. It could be large, that's totally okay. It could be quite a bit of chop, but overall, that would be a descending zone that would break, retest, and then once you get a wind up, you'd see some series of higher lows ideally. This was an ascending triangle formation. You can see that right there. And once it breaks, retest the previous resistance for a new level of support, you're definitely looking for continuation patterns to the upside. And then you see that there are, pauses in momentum where you're able to get a really solid entry for you to carry the momentum. So that's going to be what we're going to be looking for the next many years, basically. Unless something significant changes, that's going to be my view. Even if we do get that long drawn out consolidation, it could take like 3 months. That is completely all right. This is a long-term approach of trying to understand where the direction is going. And the reason I think that it's bullish is obviously because it does, like I said before, look like the 50s, 60s times where it was really easy to get credit, and inflation, I think, will take hold of the economy sooner or later. And historically speaking, gold and silver have done really well in times where monetary uncertainty and inflation really hit the economy. So that's going to be my view of gold. Let's just go to the 1 hour and see what's happening here. Yeah, still moving to the upside, hey? And this is a really good point to touch on, is the fact that it makes sense to have 2 different investment pools. If you are super bullish, for example, Bitcoin, Ethereum, gold, and silver, there's no way that you're going to catch every single move to the upside if you're going to be just trading them. So then if you have one pot where it's an investment pot where you might be dollar cost averaging, you might just have a pool of money in there that you allocated and you're happy with that amount, whatever it is. And to have that as an investment, and then also have a pool of capital where you're just trading, so then if it does move to the downside, if there are drawdowns, you can free up that money and trade other assets. Because like we said, for example, if we do hit the $1,900 zone on gold and then we're consolidating or not really trending upwards for multiple months, if we only have all our money in gold and nothing else, we can't make any sort of revenue because it's an investment, right? We have to leave it in there. If we took it out and put it back in all the time, that would be trading. So dividing up capital and allocating it in certain type of either investing or trading pools, I think is really beneficial when you have a high conviction that there is going to be a move to the upside, whether it be in stocks, crypto, commodities, whatever it is. I do think, well, commodities, if you're bullish on gold, it might be a little bit difficult, or sorry, oil, it might be a little bit difficult, but you can buy equity and CDX aren't the best, but equity I think would be a really good option. But that's a little bit of portfolio management, a little bit of discussion. But right now, in terms of trading, in terms of the technicals, I don't really see a continuation setup that I personally would want to be looking to put my money in. So I'm going to be patiently waiting for a better opportunity. All right, so that's going to be the video in terms of the global macro. We're going to jump right into the crypto side of things. Going to be first looking at BTC and then going to be looking at the tools to understand the altcoin market. And BTC does look like it is doing pretty well, which is great to see. And I just put an order in on something just to make sure. All right, so let's now go into BTC here. So we're talking about this did break out of the, I'm just going to turn my phone off. This did break out of the descending triangle or symmetrical triangle, whatever you're looking at, to the upside, but we're also looking for a validation of a break in market structure. Now you could argue market structure was here and it's retesting it. I'm going to be a little bit more conservative and look for this major recent high. We already talked about the volatility really shifting to the downside. What we're looking for is that next expansion in volatility, right? But what we don't want is to get faked out by a small little wick like we've seen. Let's say if we are zooming back to previous times where we've had a small movement in price and then we got contractions. So right here, we get these spikes and this did fake a lot of people out where we got to move to the upside. If you draw some trend lines, you could definitely create this into a support zone, especially if you're going like this and like that. So what I'm looking for in these contractions and volatility is instead of trying to get the absolute best entry, I don't need the absolute best entry because I know the move and the aggression of the direction that's going to go in is going to be very strong. So what I'm going to be looking for is I'm going to be waiting a little bit longer just because I know this is a bit of an outlier in terms of how small the price movement is getting or how the lack of volatility that Bitcoin is showing. We can see by this Bitcoin historical volatility index, we haven't seen many times in history where volatility has been this low. And the times that we have seen volatility this low, the move after that has been immense. It's been huge. It's been colossal. So we're going to be looking for a similar type of move when Bitcoin does inevitably break out. So then that's why we're waiting. We don't need to have the absolute best entry. We are wanting to see the structure of the market shift along with the price action. So the price action broke, but the structure has not broke in my view. So I'm going to be patient and wait for it to break out. But we are going to be looking at some altcoin market tools as well as alts in this video. I know Truck Nubs, you are here, so I'll definitely, if you have any questions on specific alts, I'm just going to look through the basket that I'm currently looking at. But if you're looking at something that I have not gone over, don't hesitate to, or even a different asset, doesn't have to be crypto, but yeah, don't hesitate to request a analysis from crypto to metals for equities, whatever the case may be. So that's my take on BTC on the 6 hour, which will basically not change from yesterday. We're still looking for around that 94 or 95 zone to break. Once that cracks, then I'm going to have to change my bias, even though we know that there's heavy resistance here. The contraction volatility, the lower highs and the higher lows is ending, and we could see a series of higher highs and higher lows, or just a certain point where we're going to get a huge boom. But we got to look at the volatility as well as the two things, market structure and price action. So now let's look at some altcoins. So we like to use this, which is going to be showing us relative strength or weakness depending on what we're looking at. For example, if we are seeing Bitcoin look like it's going to have a bearish push to the downside, or it just looks bearish, we'll be looking at the lower half of this section because we want to be finding weak cryptocurrencies, right? We want to be looking for relatively weak cryptocurrencies compared to if we're looking for longs like we are right now, we're looking for relatively strong altcoins. So what we're going to be looking for is the top 3, 4, 5, depending on how many you're wanting to look at. I have a lot of space, so I don't mind. So we see VET or VeChain. We also see Chainlink up here on the pretty high part. This is also the daily. So we can go to the 4-hour and get a little bit different. OMG, so I haven't seen that. So OMG, I will look at that one. I have not. We also see IOTA. Wow, interesting. If we zoom back, we also see ALGO. That's going to be definitely one that we're going to look at. I'm just writing them down. Qtum, wow. These are some ones that we don't see. VeChain, definitely, and this one is going to be Link. Yeah, so the further back you go, it's going to be VeChain and Link, which is going to be big ones. We're going to look at ALGO, which we did talk about within the Performante Premium section. And then we also have a few others. We see Cardano, that's looking and setting up for a nice setup. Atom doesn't look too bad either, if it's kind of in the mid-range here. So let's look at Atom. Don't know if I have that one. So I got ALGO, OMG, Atom, and then we got ADA, Chainlink. I guess we could do BNB as well, which I quite like. So let's look at VeChain first, and then we got Chainlink, Cardano, and Stellar as well. I forgot about that, which is also looking pretty decent. So let's get this open, and let's get that just so it looks a little bit better. So overall, it looks like a really good structure. We can see that VeChain has had, if we're going to a little bit larger of a zone, we can see that this zone was a really nice break of a symmetrical triangle right here. And we're seeing something similar. It doesn't have to be absolutely perfect just yet. We can see a lot more contraction that could appear within this structure. So I have these projections to kind of give us a zone of where the support and resistance are, squeezing the price closer together. So it's looking really good. We do see that there was a huge amount of buy volume that picked up the price from the low here, indicating demand coming into this market, into this pair, which is really great to see. And we see that it still held the series of lower highs. So the structure is very well respected, which gives me even more conviction that it is going to continue its trend to the upside. That does not mean I over leverage, I over position. I still want to adhere to the strict trading rules and basic simple management strategies that should be used in any method of trading. If you're risking a certain amount or a certain percentage, you shouldn't put more in just because you think it's great or it looks awesome. You have no real edge in a single one trade. It's only through a sample size that you have edge. But it's looking really solid. In short, it's definitely not ready yet. But if we are looking at this previous zone and what could happen from it, I'm just seeing how it looks and where I should be taking it from. Kind of like this. Let's make it a little bit bigger. Something like that. That would be great to see. So then what we're going to be looking for is previous market structure somewhere like this to be acting as a new level of support. You'd also be looking right here. Well, that's actually a really good zone because we see previous support right there. I would be looking at that zone. You could be a little bit more conservative. You could be looking at this zone up here, like so. And then once you see a break, possible retest, you can put a stop limit entry right up there. So it would be like a stop loss if you're going short, except you're going long. That's how you would use it, for example, on Binance. And then you would enter the right there. You put a stop loss maybe below this low. And that would be the type of trade that you're looking to take, ideally. So that's going to be the first option on VeChain. If something else happens, we'll definitely change our viewpoints. We could still draw a horizontal zone right here. If it does kind of fall below this ascending level of support, we are not looking for short setups. We are only looking for longs on the alts that we're covering today. So that's going to be VeChain. Now we can see Stellar. That's going to be the next alt. It was doing really well. We see this nice run up here. And then we did break this major zone on Stellar as well. And we can see it's retesting this zone very, very aggressively. But the wedge is still holding. We see initially we retested, made a move to the upside, made a higher high, came back. Now we're making a higher low, and then it does look like it's contracting in volatility, potentially going to be expanding soon, which it does potentially look like right now. And then when we zoom into the smaller time frame, we can see this previous resistance here turn into a nice new level of support where we see our first touch, second touch, third touch, and then we see that turn into a support zone. But this is the main zone that I'm going to be looking at, this resistance right here. Very, very well respected. And it did break this resistance, but we can see we're still under the market structure resistance. So I do not want to be looking at this until we see a break in market structure, which would mean that we would need to see a break to around the 0.1 zone. That would mean that we've broken this major zone right here, and then we'd be looking at this major zone. So possible if you would be looking at entering on these higher lows right there. That's where I would be looking at. What I did realize is I actually didn't do the altcoin market analysis before, which is totally okay. We'll do that after, but that's basically looking at the dominance, BTC dominance, as well as the total 2, which is the cryptocurrency market cap excluding BTC. But they're going to be something that does not change a whole lot. So it's on a daily or weekly chart, or 2-day chart, so it's not super pertinent that we look at it every single day. So the next chart is going to be Chainlink, which actually looks pretty solid. It is able to hold a new level of support multiple times. We see this was the support back on the 13th of July, and then we've been able to hold it since then, forming 3 rejections of this key level of demand. And we also see 1, 2, 3, 4 validations of this descending zone right there. So you could call this a descending triangle formation, but I do have a previous resistance turn support twice. So this is also a wedge for me as well. So I do have validation not only once but twice that there's a strong level of demand here. It's really respecting it well. We see that the price is not able to break below the zone, failing to make a lower low, holding it as a nice level of support. And then all we're looking for is the shift from a contraction, where we're going to be holding this support and the descending triangle to further the contraction and volatility, and then we're going to be looking for the expansion and volatility, something like that, where we have 2 structural zones that we're looking to pass. We see this previous support right there, which is not perfectly a resistance, but we see a rejection not once but twice, but 3 times. So this first zone is going to be somewhere around there. I need to see the price pass this zone for me to even think about entering long. And then the next zone that would be really important for the price to pass in order for the bullish momentum to continue would be this previous resistance right here. This was a very important level of market structure where it was previous levels of resistance turned to support. So let's just find out where those 2 zones are by going like this. First zone is going to be 780. Next zone is going to be at 815. So we got your 2 levels there that we're going to be looking at. And for VeChain, let's just put that there as well. It's definitely got a little bit to go, but that's going to be your first zone. And then you could be looking at around right here for your second zone. Right around there. All right. And I just like to keep those there to keep it very clean, but then I can look back at them at any time, which is very handy. Right around there. Cool. All right, so the next thing we're going to be looking at is Cardano, which I've already identified right there, but very similar structure to VeChain. We can see symmetrical triangle, whereas the Chainlink and Stellar trades are both in a short downward correction, and VeChain and Cardano are still able to hold these higher lows on the 4-hour or the 1-hour time frame. So let's actually go into Cardano. Very similar structure, and we can see this was the previous structure that we were able to trade right here. Bit of a move to the downside, but we were able to get that retest instead. So let's get our projection right there. Oops. Let's get the projection. I'm just trying to draw it in so people understand how it looks. So that could be the zone right there. And I can also draw a horizontal zone, which connected the horizontal zones like so. And then you got a break retest, and then this was the retest that I entered on, which was the conservative entry. So let's get our brush tool. So right there was the entry that we had as the conservative approach to this symmetrical triangle formation. So what we could be looking for in this one could be similar, or it could be a little bit more aggressive, somewhere in there. So initially, this was the resistance that we needed to break, and we did not break that zone. And then we saw an instant move to the upside, right? So we did not get an entry here because there was no retest. What we did get a retest of was this zone, and that's why we entered right here. We did not get a chance to enter on the retest of this structural zone. I guess I can leave that there. So what we're looking for on this area is ideally we want to get an entry at this level. Right around there, 16, or I guess 127, because it was up there, very simple. But if we're unable to get it, this would be the next zone that we're going to be looking for, is that 13.5-ish level would be the next area of support that we would be looking to see a retest on. So then in a perfect world, if we were to get the same thing, we might be unable to get the first entry, or it might be something like this, where we might get that perfect retest. That would be ideal. You get a push, a little bit of a pullback, or this could be more aggressive, like that. That would be the ideal situation, really, because then you can not only get an entry after this validation, but you also get another validation where then you could look for entries, or you could look to add on the trade that you already have on, which is already in profit, making a new high. So you have a couple options here, but Cardano definitely looks like it is setting up for a great opportunity to the upside. So we will be looking at it for further continuation patterns or further continuation entries. So that's going to be the 4 that we're looking at right now. Also looking at ALGO. Let's go to the daily chart. Actually, let's go to the weekly. We don't do this for every single one, but I definitely like to look at the weekly. A lot of them are either breaking or have broken the major bottoms, but ALGO is kind of right near this major level here, and we do have room to go, but it's just something to consider on the weekly chart. But on the support side of things, previous resistance right there, so I think it still has some room for the upside to hit the next big target at around 50 cents. So going on to the 6 hour, we do see this previous key level of support, which is actually a resistance on the monthly chart, is holding for a nice level of support. And we even see higher lows connected by an ascending trend line. We had a symmetrical triangle breakout, retest, holding that same level of support, and it looks like it's ramping up to try to make another push to the upside here. So when we go on to the 2 hour chart, we notice that if we take a picture, right here, this was that symmetrical triangle that broke to the upside, but we did get stuffed pretty hard and came right back down, but we're able to hold this previous resistance as a new level of support, as well as the previous support within the symmetrical triangle as well. So there's a lot of demand built up around this level, and we see it hold extremely well, and there's low volatility, which usually breeds high volatile times in the future. So we know that there's a lot of demand right here, and what we're looking for market structure is to see the break of this zone right here, this high, which is also a previous level of support, and we see, looking back, it's a pretty significant zone within the price action. And then this zone, this descending zone, as well as this horizontal zone, would be broken right around here. So when it passes around 0.36, that would be the point to look for potential retest candles, something like that. That would be a good opportunity in my personal belief. And then a potential place to either add on, or if you were unable to catch the move, or if you want more confirmation, would be this key level. So let's just take a picture of it again. We see this resistance right here, and then the candle closure type B, and then a candle closure type B. So lots of rejection at this main level at, let's call it 39. So that's going to be the place to add on if we don't see a nice solid potential to add within the lower levels right here. But although this is a little bit more risky, you get a higher risk reward. This is more conservative, more dependability, but potentially lower risk reward because the 50-cent mark is both a psychological zone, but also technically speaking, a very significant level of supply. So that's going to be my view of ALGO, and then we can look at Atom, which is also Cosmos, and then we'll look at OMG to end off the video. And if anyone has any other alts that they would like me to do, definitely do not hesitate. But let's go back to the daily on Cosmos. Major level of resistance right here. Not awesome to see, but we do have space until we get there. But we just see a sideways consolidation right now. Nice key level of support, so we're near a major level of support, a little bit further away from a major level of supply, so that's good to see. We do have room to go to the upside, and we also see we're pretty near key level of support, so I'm going to delete this and understand that this is a major level, and I can do that by going like this just to really notify me that this is a very significant level of demand, not just in this little price action section, but also through prior price action. So we can see right now as we're nearing a level of support, we see lots of demand coming in because we see this wick to the downside and get rejected right back up. This is an asymmetrical triangle. Potential reversal to the upside here because this is actually looking pretty decent. Let's get that. Let's get that. A little bit neater, a little bit tighter. This wick does have to get broken for us to look to enter though. That's going to be the structural zone that I'm going to be looking for. So let's just set up this trade. That's going to be red because that's the resistance. And this is a potential reversal pattern where it's a symmetrical triangle, which could be a continuation pattern. And I love it for continuation patterns, but in the right circumstances, it could be a reversal pattern. Like we can see right here, this is right against a major level of support, and we have more room to go to the upside, meaning if we enter right here and we have a stop loss right here, we have a decent opportunity to get a good risk reward. And if it's going to break this and go to the high major level of supply, that's obviously absolutely phenomenal. It doesn't mean that you're going to be able to get this every single time. It doesn't mean that you're going to be able to get this every single time. But in terms of the probabilities, you're near key level of support on an uptrend. You've validated this zone enough times that you can call it a key level of support. You got a contraction and volatility near a demand zone that you've respected and have validated really well right here. And if it does start breaking to the upside, you have a high probability of continuing the correction or the consolidation, but the overall trend and momentum and direction and sentiment for the global market is to the upside for a risk-on instrument like Atom versus USDT. So in my opinion, this is a pretty good setup, not just with the price action, but also a little bit more of the fundamentals of it as well. But what I would like to see is this zone right here break because of the wick there. You could look for a little bit more of an aggressive entry, but ideally that would be the entry that I would be looking for. And then a feeler trade, which would be like maybe 20, 30, 10% of your position could be once it starts breaking that way. So if we're going to get something like this to start it off, you know, you could be looking for, let's just make that a little bit cleaner. There we go. You could be looking for a possible retest of this zone where you get, let's get this right here, where you get the resistance right here, which will possibly be a new level of support. But this is also in line with the resistance support turned to resistance, and it's going to be a new level of support if that does break. So there's a level of confluence. There's going to be demand right here, but we do see that there was a lot of rejection, a lot of sell pressure, not only here, but there was a lot of buy pressure, so that's going to be a significant zone as well. So we do see some pretty important zones, so let's indicate where those are right now on Cosmos. So the more conservative approach would be passing the $4 mark, and a little bit more of the aggressive approach would be still the $4 mark, $4.05, I guess, so not a huge discrepancy, but we can see 1%, you know, if that's your risk, that you're basically able to get 1% more of the unit of risk that you're risking, which is a decent amount, right? Let's say you're risking $100 per trade. If you're able to make $100 more on a trade, that's a decent amount more for sure. Or $1,000, whatever it is that you are trading. So that's going to be what we're going to be looking for. We don't see it just yet, but I do think that Cosmos is setting up to be a decent opportunity. XLM breaking that zone. Stellar is really looking good as well. So in short, let's sum it up. The ones that I'm looking at most is going to be XLM because it already broke the descending zone. I'm just waiting for the 0.098 zone to break in order for me to look for opportunities to continue the momentum. Atom is also an opportunity that I want to see it pass at least the $4.01 mark. $4.05 would be ideal. And then Algo, the zones that I want to be seeing at least minimum is the 0.36, but a little bit more conservative would be 0.38. So those are the overall alts that I'm going to be looking at. I might actually separate these tabs because these do look pretty juicy. So I will be notifying the Performante Premium members with the overall commentary for the ones that we're looking at. If they break out, if they don't break out, and if they go to the downside, I'm not going to be looking at them nearly as much just because I'm not looking for any shorts within any of these alts. I'm only looking for long opportunities. So if it gives it to me, I want to be very excited. I'll follow exactly what my plan is. If it doesn't give it to me, that's not a worry. I'll be looking somewhere else in the market, and it's not really a bad thing not entering something that didn't turn out. You want that outcome. If it doesn't come out the way you want and it's not as respected as you thought it was earlier in the pattern, if there's something wrong with it, you don't want to enter it. You don't want to force it. You don't want to marry a trade. You want to only take the absolute best setups, right? That you want to see it, you want to play it out in your head, what you exactly want out of it, where you want to enter, what you want to see, how fast you want the market to provide you that outcome. And it's not going to be right every single time, obviously. And even the outcome might be correct, but it does some stuff that you didn't expect before it hits your take profit, right? You don't know how the outcome is. So at the end of the day, you just follow your plan and really have confidence in the ability to create an edge over a sample size of 30 to 50 trades. So that is going to be the altcoin market in terms of the actual pairs against USDT. We're then going to be looking at the other things to analyze the crypto market. We see total 2 is the total altcoin market cap is actually moving, potentially breaking the resistance of just under 100 billion in market cap. If it does move to the upside, obviously that's pretty bullish for altcoins. It means there's capital flowing into altcoins, which is absolutely awesome. That means that there's more speculation in the market, which means you want to be long Bitcoin, or sorry, you want to be long alts. Bitcoin could go up, but this is the point, if it does break, that you want to be looking for altcoin exposure. Next quick thing we're going to be looking at is the Bitcoin dominance. We do see some altcoin ran and then came right back down. I don't know which one it was, but there was a moment in time where the dominance was collapsing very quickly, meaning there was an altcoin that was taking a huge chunk of market share. I don't exactly know which one it was. I just follow the coins that are in the basket of cryptocurrencies that I look at. But we do see weakening in the dominance. Already it pierced through this support zone. It didn't hold, but it pierced right through it, right? So there is certain alts that are doing very well right now, and we're just looking and finding setups that, in my opinion, have yet to break out, but will potentially break out. And if it does, we'll have great opportunities for high risk-reward setups. So I'll be keeping Performante students notified about these, and that's going to be the end of the video. And what I'm also probably going to be doing is actually changing here, because these look like they're about to break out, whereas gold and silver have already broken out, and I've kind of extracted my fair share of money out of them, and then I'm just going to be waiting for the next setup. But these definitely still look like they're about to break out, so I'll be really focusing my time on Stellar, or it depends on which one actually breaks out, right? Stellar is the closest one to actually an entry because it's already broken the descending wedge. I'm just waiting for the structure to break. Algo also, this bottom half right here, the price action already broke, the descending wedge already broke, but the structure has not broken. So Algo and Stellar are the ones that I'm looking at to enter probably the soonest, depending on how things go. And then Cosmos is up there, which is also Atom, same thing. And things that will take a little bit more time, in my opinion, will be Chainlink, VeChain, and Cardano. So those are the ones that I think still have a little bit longer in terms of the structure formation for the price action. But I think they're still looking really good. They're still looking well respected. We just need a little bit more validation for us to really trust the overall trade setup. So that's going to be the video for today. Hopefully you enjoyed it. I don't really see any questions, so I'm assuming that I was able to touch on the things that people were wondering about. And I hope that this was very informative and informational. So hopefully you're having a good week. If you do have any questions for people that are watching the recording, definitely don't hesitate to speak up and kind of give me your opinion or what you're thinking, because I definitely would like to help out. So thank you very much for your time, and I really hope that things start moving in a little bit for these alts here. That would definitely be nice. Or if Bitcoin breaks and starts to increase in volatility, that would be a huge moment where we're going to be really focused on the charts, not really going to be taking time away from the charts during the day. Sometimes if it's a little bit slow, well, mostly if it's a little bit slow during the low volume times between the after New York session, before the Asian session, Pacific time between maybe noon to 2, somewhere like 1 to 2:30, somewhere around there, is when there's a little bit more of a low time where there's less volume. But in the crypto market, it's kind of anything goes. There are obviously more high volume times, like in the morning, London session to New York session. That kind of time is pretty busy. But in terms of when they jump, you can kind of have it jump a little bit more random than FX, I find. But we'll see where it goes. I'll keep an eye out. So until next time, have a good one, traders.